it's so we've mentioned the word deduction here, and I know some are gonna start to piece this together that this is tax deduction for purchasing land. I mean this, and man, this is something I was telling you before. This is something I've heard about. Know some people that have done it. There's lots of companies. Well, I say there's lots. I know there's companies out there doing this, but I have never gotten a great straight answer from someone about some of the questions I have in doing this, because you buy a piece of land, you look at deduction, and sometimes it's a lot of money. Like some of the dollar amounts I've heard, and you start to go, the skeptic in you comes out, and you're like, no way. There's
too good to be true.
Yeah, there's no way.
Yeah.
And then it's a matter of the more the dollars, okay, one, your skepticism goes up, but two, where do I even start? I don't know what to do. It's easier just to sweep it under the rug, and a lot of people are like, well, why are you sweeping a deduction under the rug? Well,
there's planting to do, Josh.
Yeah, well, I
There's
just need to go, I need to go
right.
spray, or I need to go do this, that, or whatever. It's like, okay, but there is, and I have had a lot of conversations. We have just the last couple of years, really, with the podcast and customers and friends and just people, that the time of agriculture where your dollars used to make the majority of your dollars, and this is going to really upset some people. It used to be you made your dollars with your back. Anymore, you make today's dollars, the majority of them, with your pencil. And, not that you didn't make them in the past with the pencil, and not that you don't make dollars today with your back. But it's very, very much so. The farm used to be, if you worked hard and, that covered a lot of potential losses or built operations. But to maintain an operation today and grow an operation, man, if you're not good with your books and your numbers and everything else, the farmers that aren't are the ones that I see struggling the most. Yes, we are pushed. It is crammed down our throats. The yield is king. All of us love to grow that, record yield. It's fun. It's cool. It's very rewarding. Mm-hmm. But at the same time, what was your cost spend to get there?
Right.
Did your cost spend equal the bushels yielded? If so, if it was that your goal, cool. Do you want to be profitable? If so, there needs to be a gap between bushels made and cost spent.
Mm-hmm.
And so the world of finance is something that I don't know, needs to be a light shed on it for agriculture, because it is really, I firmly believe it's the only thing that's going to save the family farm in the future. A lot of them is learning how to be better with tax code, be better with deductions, how to be better with financial planning, all of these things. So can you go into what the deduction is from a 30,000 foot view and then scope down on it?
Yeah, I think so. And that's insightful comments, because, we have, we have a business that's still hard work, right? You still got to do all those labor intensive type of jobs out there across agriculture. But you've got to blend that in with some really good decision making, and not just maybe in the past where we kind of made things off. That's the way Dad and Granddad did it. It's really looking at the information and making the best decision that we can in the moment. So essentially, what's too good to be true are the prices paid for ag real estate, right? Those are big numbers,
Yep.
and that's driving a lot of decision making. In generational transitions, that is kind of unfortunate in my view, right?
Yep.
So what we've done is made a product, a report essentially, that makes it very practical for virtually any ag landowner to claim an important part of the deductions that are available to them. Just like we would, when you bought a farm, buy a farm and you're going to take, everybody's accustomed to taking some value out for the fence rows and the irrigators and the wells and the improvements that are on there. And they're going to set that apart from that land asset on the books, and they're going to depreciate it out over time according to some schedule. what we do is essentially help these landowners properly identify another deduction that they can take when they buy ag real estate. And it's defined in the code as excess nutrients. Okay. So it's basically you buy and you pay a premium for more productive ground, right? So we're going to help in the process of our work to identify the appropriate number that you can claim on your tax reports and save yourself some cash in terms of what you owe the IRS. I know, one of the things that is kind of surprising to people is this really doesn't cost the IRS anything. Do you know what I mean? Because every farmer's, the good farmers, right? Everybody that's planning, they're going to sit down with their tax planner sometime in fourth quarter, and they're going to figure out how to get that Schedule F to look the way they want, right? We have a lot of tools in the toolkit. We can defer sales, right? And manage that number. We can prepay expenses and manage that number. We can go out and buy something, right? But all of those things are going to impact you in terms of cash, right?
Yep.
You're gonna have cash sitting somewhere that's not in cash. What we do is a very cash efficient way to manage your tax liability at a very low cash cost relative to the deduction.
Yep.
Yeah. I don't know if that answers your question or not, but it's a capital deduction. You have to be the landowner to claim this.
And you're claiming.
Yeah. So maybe go through the soil test and in the sense of what are you deducting?
Yeah. Well, what we do is we'll go out and actually take soil data right out of your field. Okay. Generally, it's a grid sample. Okay. And on most farms, it's about a 10-acre grid. Sometimes on the ranches and grasslands, we'll get to larger grids.
Okay.
It kind of depends on how complex the soils are and contours and things like that. Because our duty is to get a representative sample of data.
Yep.
Right. And so we work very hard to make sure we do that for our clients. So we'll go out there, collect the data. We pull that information back into our system, and we combine that with market value information, on each of the nutrients that we're evaluating, and that puts that gives us like a total value, and then we go through and we make some adjustments that the IRS wants to see in there, make sure that's all done correctly and appropriately for each client, and then we publish that in a report to the landowner, and then it's on average it's been running about $1,700 an acre. So
Wow.
On a quarter section of ground, you're looking at saving, or reducing your taxable income by $250 to $350,000.
Yeah.
Which can make a difference, right?
Oh, 100%.
And
So this is the nutrient. It's a deduction based on the nutrient value of the soil profile of the soil.
Yeah. We kind of convert content to value in our process, and then we make sure that it matches up with all the guidance from the IRS and top tax, attorneys and filers that give us feedback on what they think is best. So we've listened to a lot of people over the years, and we've got advisors and counsel that have done a lot of this for a lot of different clients, and this is, we follow the best advice available in the country.
So, guys, if you've liked the information that you've seen so far, go ahead and check out the full-length podcast on our YouTube channel. Be sure to subscribe there. It's also on all the major podcast platforms. We're constantly dropping info and more content on all the social media platforms, TikTok, Instagram, Facebook, etc. Check it out for a lot more content.